Let's take a look at problem 10-1A. In this exercise, we are looking at three different liabilities a company has on January 1st, 2017. Accounts payable 42,500, sales tax payable 6,600, and unearned service revenue of $19,000. All three of these liabilities typically are current liabilities, which a company expects to meet very soon. So I have my opening balances for each of these T accounts over here. We have 5 transactions that have taken place in the month of January, and then we have some additional information given to us. They've asked us to journalize the January transactions and then do adjusting entries, and then finally prepare the current liability section of the balance sheet. So let's start with the first transaction on Jan 1st. I borrowed $18,000 cash from Apex Bank on a 4-month 5% note. So my first transaction, I'm going to write the date. I borrowed money, so debit cash. I have to repay this money. It's a liability, and I'm going to call it notes payable, not accounts payable, notes payable, and it's for $18,000. I'm also going to write for this particular problem the terms of the note, just so that I remember what they are. I can obviously look in the problem, but I would prefer writing it here as well on the memo line. Another thing you're going to notice is I have T accounts for all my liabilities set up over here. As I do each journal entry, I'm going to update the T account. So notes payable credit, 18,000. I'm going to put that amount over here. The next is on Jan 5th, I sold merchandise for cash totaling $6,254. This amount includes 6% sales tax. The sales tax that I collect is not mine to keep. I have to give it to the government. So I know how much cash I collected. I collected $6,254. Most of this money is mine. 6% is not mine, but 6% of the sales number. So the way I would calculate the sales number is take the number which includes the sales tax and divide it by 1.06. I've divided by 1.06. The reason I would do that is if I had the sales number, I would calculate the total cash received as the sales number times 1.06. So here to work backwards, I divide by that number. Now, one way to confirm that this number is correct is the sales number that I've arrived at. I will multiply that by 6%. When you add these two numbers, it has to be 6254. It can't be anything else. If it is, then we have made a mistake. We need to go back and redo our calculations. So cash is mine to keep. 5,900 is sales, that's a revenue. Sales tax payable is a liability. So the sales tax payable, I'm going to put $354. I'm going to post that number. The third transaction happens on January 12th. I performed services for customers who had made advance payments of $10,000. So they're telling me that this unearned service revenue, I have earned 10,000 of the 19. So when I do the work, I'm not going to get cash. I just reduce my liability. Unearned service revenue debit, service revenue credit, and that's for $10,000. So my unearned service revenue is debit. I'll put that on the debit side, $10,000. On the 14th, I paid the state's treasurer's department for the sales tax collected in December. So last month I had collected 6,600. I'm paying that in January, the following month. So when I make the payment, again, my liability decreases, sales tax payable debit, and I'm paying cash. So cash is going to be credited. I know the amount, it's $6,600. So my sales tax payable decreases because I paid off that particular liability to the extent of what I owed from last month. And then on the 20th, I sold 500 units of a new product on credit, which means I didn't collect cash as yet, $48 per unit, plus I've collected 6%. So this is an additional amount. It's not included over here. So I've not collected cash right now, so accounts receivable debit. I'm going to credit sales because I sold a product. I also collected sales tax payable. So let's start with how much I collected by way of sales, or how much I'm going to record as sales. 500 times 48 is $24,000. On that, I collected 6%. So 24,000 times 6% gives me 1440. So the total amount that is owed to me by this customer is 25,440. So I'm going to credit my sales tax payable 1440. Again, from each journal entry, the only numbers I'm posting are the liabilities. I've taken care of my 5 transactions. Remember, a transaction deals with an outside party. Now let's look at what I have here. During January, the company's employees earned wages of $70,000. The withholding related to these wages is $5,355 for Social Security, that's a FICA taxes, $5,000 for federal income tax, and $1,500 for state income tax. The company owed no money related to those earnings for federal and state unemployment taxes. That could have been an additional tax burden on the employer, but they're saying there's none in this case. Assume that the wages earned during January will be paid during Feb. No entry was recorded for wages or payroll tax expense as of Jan 31st. So I'll explain that part in a minute. Something I forgot to do over here earlier was each of these transactions have happened on different dates, and we need to have those dates. I apologize for not showing you that earlier. Okay, so coming back to what we were reading over here a minute ago, on the 31st, I skipped one piece of information there. I'll go back to that. I have salaries and wages expense debit, $70,000. Go down a little here. Of the $70,000, I'm not going to give all of it to the employee. And why am I not giving it? Because I have withheld FICA taxes, the Social Security taxes. The amount has been given to me, $53.55. I withheld federal income tax for them, and I will give that to the government. I also withheld state income tax for them, and I'll give that to the government. These are all going out of the employee's paycheck. So what amount will they get? 70,000 less these three numbers. Now, have I paid the cash? Have I given them the money? Not yet. I will give it to them within a few days in the month of Feb. So that's going to be sales tax payable. Okay. So a total of 70,000 is coming out of the employer's pocket. 58,145 will go to the employees. And this amount of 11,855 on behalf of the employees, I will give it to various government agencies. All these, as you see the word, are payables. They are liabilities in my books. So I have FICA payable, federal income tax payable, state income tax payable, and salaries and wages payable. Okay. Now, I'm going to continue with this part. This FICA payable, the FICA payable is something that the employer also has to pay an equal amount. So this amount that we have over here, both the employer and the employee will pay this amount. Both the employer and the employee pay the amount. So a total of 10,000 $710 will be paid to the government for FICA taxes. Question that I ask students always is, what happens if I'm self-employed? If I'm self-employed, I pay both the employer and the employee's portion. Kind of harsh over there, but that's how the system works. That's what we got to do. Okay. So the FICA is based on the employee's wages. Whatever that amount works out to, the employer has to put an equal amount. So that becomes an expense for the employer. So post that amount also over here. Okay. Now we've taken care of everything that's up over here, but we still have to take care of one more item. This notes payable, the very first thing that we had over here, we borrowed money. At the end of the month, I have to accrue interest. I'm not going to pay the interest right now. I'll pay it at the end of 4 months when I repay the note. But each month, I go to recognize the fact that interest is accrued. My journal entry is going to be interest expense debit, interest payable credit, $18,000 times 5% times 1 over 12. $18,000 times 5% times 1 over 12, because I'm accruing only for 1 month. That's $75. Okay. Now that I've taken care of all of these entries and posted it to the T accounts, I need to close all the T accounts to get the balances in order to prepare the current liability section. Accounts payable, there were no entries over there, so I can take that amount directly. Accounts payable, 42,500. I've put a double underline over here just to indicate that's a balance in the account. Sales tax payable, I had amounts on the debit and credit side. So the first thing I do is add up the debits, add up the credits, take the difference and put it on the side which is larger. And my sales tax payable is going to be $1794. Unearned service revenue, one debit, one credit. Take the difference, put it on the larger side, and I have my unearned service revenue at $9,000. Notes payable, there was only one entry, $18,000. Interest payable, only one entry. I have $75. FICA tax payable, there were two entries on the credit side. Add that up, $10,710. That's the amount I put in my balance sheet. The federal income tax payable, state tax payable, and salaries and wages payable had only one entry each on the credit side. I bring those numbers over. And I was told that the total current liabilities, a hint was given to me. And hopefully the number is what we have over here. And thank goodness it is. So we have a total of 146,724 as the total current liabilities. So in a problem such as this, chances are if you make a mistake, you forgot to do the interest calculation on the note. Even if you're not told about it, you have to at the end of the month accrue it. The second place you're likely to have made a mistake is if you forgot that the employer also has to recognize the fact that they will have to pay FICA tax payable and do an accrual entry. So give this problem a try and go through it slowly to make sure that you do all your calculations correctly over here.